Right now, in March 2026, millions of Americans who spent their careers as teachers, firefighters, police officers, and federal workers are finally getting money that was wrongfully taken from them. And your check could already be on its way. The Social Security Administration has officially begun issuing retroactive payments to over 3.2 million people whose benefits were slashed or completely wiped out by two provisions known as the Windfall Elimination Provision and the Government Pension Offset. These were not minor reductions. More than 70% of people affected by the GPO alone lost their entire spousal or survivor benefit. But here's the real story most people are missing. As of early March, over 1.1 million people have already received their lump sum payment, with the average retroactive check coming in at $6,710. And impacted individuals are seeing an average increase of $360 per month going forward, every single month permanently. The SSA is also adjusting new monthly benefit totals, and most retirees can expect to see their increased monthly payments starting in April. If you haven't received anything yet and believe you qualify, there is a specific number you need to call and specific words you need to say to get your case handled by a trained specialist. We're going to break all of that down right here, step by step. So let's start from the very beginning. Because if you want to understand what's actually happening right now with Social Security in March 2026, you have to understand the story that goes back decades. A story about how millions of hardworking Americans were quietly cheated out of money they rightfully earned, and how the government has finally started making it right. For over 40 years, two provisions buried inside the Social Security rulebook were silently slashing benefits for a very specific group of Americans. These provisions had names that most people had never even heard of: the Windfall Elimination Provision and the Government Pension Offset. They sound complicated, and honestly, that's part of why so few people knew they were being affected. But let's make this simple, because this is your money and you deserve to understand exactly what happened to it. The Windfall Elimination Provision, known as the WEP, was a formula that reduced Social Security worker benefits for people who received pensions from jobs that weren't covered by Social Security taxes. Think about that for a second. If you worked as a teacher in certain states, a firefighter, a police officer, or a federal government employee under the old civil service retirement system, there's a good chance your employer never took Social Security taxes out of your paycheck. That sounds fine on the surface, until you realize that many of those same workers also held second jobs, part-time jobs, or previous careers where they did pay into Social Security. The WEP penalized those workers by scaling down the percentage used to calculate their Social Security benefit, sometimes reducing it dramatically. And then there was the Government Pension Offset, the GPO, which was even more brutal for some families. The GPO reduced the spousal and survivor benefits of people who received pensions from non-covered government employment, and it reduced those benefits by 2/3 of the pension amount. What that meant in plain English is that a woman who spent 30 years as a teacher, earning a state pension, could watch her survivor benefit, the money she was supposed to receive after her husband passed away, completely disappear. Not reduced, gone, wiped to zero. As of December 2023, the WEP alone was affecting about 2 million Social Security beneficiaries, and more than 70% of people hit by the GPO lost their entire spousal or survivor benefit. These weren't wealthy people gaming the system. These were retired public servants who spent their careers serving their communities, and the system was quietly taking money right out of their pockets every single month. Now here is where the story starts to change. And this is the part that directly affects what's happening in March 2026, and whether you or someone you love might be receiving an extra check. On January 5, 2025, President Biden signed the Social Security Fairness Act into law, officially repealing both the Windfall Elimination Provision and the Government Pension Offset. This was a bill that had been fought over in Congress for more than 2 decades. Some members of Congress had been pushing for this repeal since the early 2000s, and it finally crossed the finish line. When that bill was signed, millions of Americans who had been receiving reduced or zero benefits were suddenly entitled to their full Social Security payments, and they were owed back pay dating all the way to January 2024. The Social Security Administration then announced it was immediately beginning to pay retroactive benefits and would increase monthly benefit payments to more than 3.2 million people whose checks had been cut or eliminated by the WEP and GPO. The SSA moved quickly. By early March 2025, the agency had already paid more than 1.1 million people over $7.5 billion in retroactive lump sum payments, with the average retroactive check coming in at $6,710. And by July of 2025, the SSA had successfully distributed over $17 billion in retroactive payments to more than 3.1 million eligible beneficiaries, completing the entire process 5 months ahead of schedule. Now let's talk about the monthly benefit increases, because this is equally important. Most affected beneficiaries began receiving their new, higher monthly benefit amount starting in April 2025, covering their March 2025 benefit. And these aren't small bumps. We're talking about real, meaningful money being added back to people's monthly checks, permanently, for the rest of their lives. The exact amount varies depending on your specific situation, but the changes have been life-altering for many families who had been scraping by on reduced income for years. But here's the thing, and this is really important for you to hear if you're watching this in March 2026. Not everyone has received their payments yet, and there is a specific group of people who are still waiting and may be leaving money on the table right now. There are people who never applied for Social Security benefits in the first place because they were told by SSA employees that the GPO would reduce their spousal benefit down to zero, so why bother? Those individuals are now in a different category, and the rules are different for them. Specifically, if you never formally applied for benefits because you assumed they would be wiped out by the WEP or GPO, you are not automatically receiving those payments. You have to take action. And the clock is ticking because people who apply now are generally only being granted up to 6 months of retroactive benefits from the date of their application, rather than all the way back to January 2024. Every month you wait to apply is a month of benefits you may never recover. So what do you do if you think you fall into this category? The SSA has set up a streamlined process for new applicants. You can visit ssa.gov, apply for retirement or spouse's benefits, or you can call 1-800-772-1213 and say the words Fairness Act when prompted to be connected with a specialist who can handle your specific case. If you are a surviving spouse who may now qualify, you need to know that online applications are not currently available for survivors. You will have to apply by phone or in person at your local SSA field office. Don't skip this step. If you are unsure whether you qualify, call anyway and ask. The worst they can tell you is that you're not eligible, but many people are discovering they're owed money they never knew about. Now let's layer in what else is happening with Social Security right now in March 2026, because the Fairness Act payments are not the only significant change affecting seniors' checks this month. Social Security benefits for 75 million Americans increased by 2.8% for the year 2026, beginning with January payments. That's the annual cost of living adjustment, or COLA, and it was designed to help your benefits keep up with inflation. For the average retired worker, this 2.8% increase translates to about $56 more per month, bringing the typical checkup to around $2,071. That's more than $670 in additional income over the course of the full year, and every dollar matters when you're living on a fixed income. However, here's something you absolutely need to know, because a lot of seniors are feeling frustrated right now and wondering where their raise went. For 2026, Medicare Part B premiums jumped by a staggering 9.7%, a surge of $17.90 per month, pushing the standard monthly premium over $200 for the very first time in history to $200.90. Because Medicare Part B premiums are automatically deducted from your Social Security check before it ever hits your bank account, that $17.90 disappears before you even see it, effectively eating up a significant portion of the COLA increase that was meant to help you keep pace with rising costs. So while the SSA is announcing a raise, many seniors are looking at their January, February, and now March checks and thinking, this doesn't feel like a raise at all. And they're not wrong to feel that way. The math is simply unfair for a lot of people. But there's also some good news tucked inside the 2026 changes that many people haven't heard about yet. A new piece of legislation called the One Big Beautiful Bill Act, signed into law on July 4th, 2025, created a brand new $6,000 deduction for qualifying seniors aged 65 and older, or $12,000 for an eligible married couple. This deduction is in addition to the standard deduction, which means it can genuinely lower your taxable income and potentially reduce the amount of your Social Security that gets taxed. You'll want to talk to a tax professional about whether this applies to your specific situation, but it's real, it's new, and it's something millions of seniors should know about and potentially take advantage of when filing their 2026 taxes. Now, because so much money is moving around right now with Fairness Act payments and benefit increases, there is one more topic that simply cannot be ignored, and that is scams. This is not a side note. This is critically urgent. In 2025, the Federal Trade Commission received more than 330,000 complaints involving government impersonation scams, a 25% increase over the prior year, and the Social Security Administration remains one of the most frequently impersonated agencies in the country. Scammers are well aware that real money is being deposited into seniors' accounts right now, and they are specifically targeting older Americans with calls, texts, emails, and even fake social media pages pretending to be from the SSA. Here is exactly how these scams work so you can recognize them immediately. Scammers typically follow a four-step formula. They pretend to be from Social Security, they claim there's a prize or a problem with your account. They create pressure by demanding immediate action, and they ask for payment, usually in the form of gift cards, wire transfers, or cryptocurrency. They may also use what's called caller ID spoofing, which means their call can appear to come from a legitimate government phone number even when it doesn't. They might even send fake documents with official-looking Social Security letterhead and site badge numbers that sound real. It is incredibly sophisticated, and it is targeting people right now in March 2026. Here are the rules you need to tattoo into your memory. Social Security will never threaten you with arrest, demand immediate payment, or ask for gift card numbers, debit card numbers, or cash over the phone. They will never ask you for payment in Bitcoin or any other cryptocurrency. If there is a genuine problem with your Social Security number or record, the agency's standard practice is to contact you by mail, not with an urgent, threatening phone call. If someone calls you right now claiming to be from Social Security and telling you that your benefits are about to be suspended or that your Social Security number has been compromised, hang up immediately. Do not engage. Do not press any numbers. Do not provide any personal information. If you believe you have been targeted by a scam, you can report it directly to the Social Security Office of the Inspector General by calling their fraud hotline at 1-800-269-0271, or you can file a report online at oig.ssa.gov. Here is the bottom line of everything we've covered today, and it really comes down to this. The Social Security landscape in March 2026 is genuinely more complex than it has been in a generation, and that complexity is creating real winners and real losers. The winners are the people who are informed, the people who know they may be owed retroactive money under the Fairness Act, who know they need to call and say Fairness Act to get to the right specialist, who know how to verify their direct deposit information is current with the SSA, and who know how to hang up the phone the moment a scammer calls. The losers are the people who don't know what they're entitled to, who assume they're not owed anything, who never make the call, who wait too long and lose months of back pay, or who fall victim to a fraudster pretending to help them access money that should be theirs. If you are already receiving Social Security benefits that were reduced by the WEP or GPO, and you've already seen your payments increase, the good news is you do not need to take any further action, but you should absolutely verify that your mailing address and direct deposit information on file with the SSA are accurate and up to date. Log into your account at ssa.gov or call 1-800-772-1213 during business hours if you don't have online access. This one simple step protects your money and ensures that any remaining payments or adjustments come through without delay. And if you know someone, a retired teacher, a former firefighter, a widow who lost her survivor benefit years ago and just stopped asking questions, please share this information with them. Because the difference between knowing and not knowing right now could literally be thousands of dollars.